you please? Could you please? Could you please? Could you please say the word? Now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Take my hand, I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Here we go into the charts. Bada bing, bada boom. And it looks like Bitcoin's struggling to maintain this equilibrium level. Do they want to go lower and claim a daily support structure on the daily time frame beneath equilibrium on the diagonal pitch fan mean reversion path to the upside? Let's find out. We're beneath the point of control of this consolidation range, and the local one here we are struggling to maintain. Let's go ahead and take a look at the liquidity on high block. What is this? Well, people lock their liquidity into the charts and let it get burnt to a crisp by the market makers for not using a stop loss. So we get to see where those crispy characters are, so let's do it. First, let's take a look at the 1 minute time frame here. So the 1 minute time frame, weekend, low liquidity weekend. So the weekend, as it dropped down below, started to ping in some shorts here, and then they started to meander their way back up into these 100x pools of shorters at 43 million here. Let's zoom in because it's a bit hard for me to see, so it must be hard for you to see. So down here at the bottom at 29,244, a $43 million pool of shorts at 100x opened up. And at that exact point in time, they decided to reverse up. They did give them a moment to reconsider getting out at a slight drawdown, and most likely they did not close, and they said, okay, we're coming for you then. So now they're coming for this $43 million lone wolf character who's trading over the weekend on high leverage. And there are partners in crime along the journey that are also in drawdown here at 29,459. Are they coming back to take out all of these guys? I am not sure, but it looks like the $43 million target is the one on the chopping block. Now, at the same time, there are 21 million, basically the same amount, being pinged in up here. So if they get this guy, then they come back for these 100x longs that are opening up into resistance here that they did bring into drawdown and said, but we want to get this guy, and they are making their way to this $43 million character and giving these guys a little bit of profit with their 45 million. It's slightly imbalanced more than to that side, but I guess they already made their journey, and maybe they're pinging in more longs on their way too. So it's basically nothing has changed since yesterday, coming down to this region. We talked about on the live stream coming back to these 100x guys, and we said they will come back to it, and they surely did.
Fatality.
And yeah, they don't leave the 100xers alone for long. And then they came back all the way down to the bottom here and shifted out. So where does it stand to close out the week? Well, it looks like there's currently short imbalance of only 337 million, which is not much of an imbalance at all on the minute time frame. Granted, the minutes get lost to Father Time every 6 days, so it's a 6-day time frame here, so all of the minutes leading into this are lost. So that's why we have to expand our vision to the higher time frame. So let's do that now as we look at the 7-day. Shout out to everyone here. What's up, horsey traders? All right, so if we look at the 7-day time frame, there is slightly more down here at 28.8 and 28.7, although you have clear ranges of $4 billion each in the upwards bound range, so you're starting to get pretty even on both sides. However, the slight imbalance to the downside suggests 28.8 on the 7-day time frame, coming down sub 29k to grab this little bit of happiness down here. Did they spawn some divergence off that on the 7-day time frame and then make their way up for False Move Monday? False Move Monday is where they start to create the high and low for the week. So there's a lot of wick-wacky on both sides to try to find out, to ping the liquidity. It's kind of like a radar pulse that pings both sides, and then they gauge their pocketbook where the imbalance lies and then say that way or this way. So it's kind of a gauge for the week. So Mondays are generally more volatile in both directions as they ping both sides. So they could come down to the 28.8 region and then close out strong above that within the weekly mindset of the weekly candle close. We do have a monthly candle close leading up. We'll go into the monthly candle close and the full moon that is also coming on Tuesday alongside that. Will that lead to a pump to the upside? Let's go ahead and take a look here at the double digits on the monthly time frame. You do have an imbalance of 12 billion down at 28.7, leading to the idea of continuing down to that region on the monthly time frame. Let's go ahead and zoom out a little bit. Yeah, you do have that imbalance located sub 28k as well. If you do clear this range and have no bounce off of that 28.7, then the next targets are lower at 27 and below. You do have liquidity paved all the way upwards in the 36k region now, starting to get some liquidity shorts opening up at the 36k. Interesting to note. If we go to the 3-month time frame, we see that that yellow hot imbalance beneath the 25k region at 24.6 and below. So are these positions going to insinuate a Bart Simpson retrace down into these regions? There's a thick band, but it's far enough away to wonder, are we going to drop down to it? It is something that is in the past has been something that they target, so I wouldn't be surprised if they go to that at some stage. As you expand your vision to the 6-month, you also see that there is this changes to a higher value at 24.6, $142 billion, 180 billion at 24.3, 114 billion at 24 even, and 65 billion 23, 92 billion 23.4, and so on and so forth. You have a thicker band to the downside as of this moment. The imbalance is existing lower. Not to discount what is existing above, you do have $124 billion at 32.1, 32.4, 72 billion, 100 billion at 32.7, 100 billion at 33 even, 100 billion, 122 billion, 33.3, and starts to taper at that point. So do we get a rejection and stop out some shorts to continue lower into this pool? On the 6-month time frame, it does insinuate an imbalance to the downside. At the highest time frame of the 2-year, you start to see this liquidity band building to the upside, however, and you see 33.2 has 197 billion, 181 billion, 32.8, 175 billion, 32.4. So these near $600 billion existing above, screaming to get taken at least to the 33.2 region, and then come to this to take this out for a deeper retrace over time. The band of 241 million is the largest band down at 24.4, and below you have 117 billion and 161 billion. So you do have a competitive liquidity band down sub 25k as well. Coming down into the regions below, you also have the 72 billion at 27.6 and 27.2, $72 billion. So the caught between a rock and a hard place, it's not as clear as can be. It's could go down to this region to grab that 241 billion at 24.4, or come up to the 600 billion at the 33.2. So let's go ahead and move to the immediate idea on the 7-day time frame, with that slight imbalance down here at 28.8, which also expresses itself on the monthly time frame here, seeing that 12 billion at 28.7. So coming down to this region in the immediate price action, if you just zoom into here and just forget about everything else, you see that there's only 4 billion at 28.98, and there is 12 billion at 28.7. So coming down to this region makes more sense in those imbalanced time frames. So, and also the idea of a double bottom in general, recovery of the wick idea. Let's go into the Binance chart and throw on our oscillators and say what's up. So here we go. So yesterday we were talking about this deep retrace into the 786 level bounce, but it was lackluster at best, so I wasn't buying it per se. We had a previous 706 bounce off of this impulse here, and we were looking at stuff on our oscillators, so let's go ahead and throw those on. Heads up display is on, Momentum Master Ultimate and A are on. And what is this little bit of happiness? Look in the description for more, scroll down to features, and you can toggle the suite as you see fit, and you can also look at each component as we go over them. So what we were looking at was the trend cloud thinning on the hourly and the 4 hour, and looking at that curvature. So the hourly did kind of what we expected, which was to thin at some point, and we maintained the cloud and saw a bounce off of the cloud idea. So we were seeing this curvature back here when we went live, and we were saying what you'd want to see is some sort of shift in the cloud and continue. You could say what we did, but we were talking about how you would hold the cloud and maybe bounce up and see if you get that resistance on the 4 hour. So we bounced on the hourly and met with resistance on the 4 hour cloud. This is curvature here, and so we're starting to see the hourly come up in nature here, but meet with resistance on the 4 hour. What do you mean exactly? Well, let's go to the 4 hours. So the 4 hour cloud, we had previous resistance on the 4 hour thick cloud, rejection, previous 4 hour resistance on the cloud, rejection, and then getting the bounce on the hourly cloud and getting tight, and now we're getting above the 4 hour cloud, but the cloud has come down in a weird wonky manner. Are we going to see some sort of turbulence here on the 4 hour time frame as it starts to thin? And so this insinuation did start to come down to a level here and started to thin. We're starting to get a little bit of a different angle here on the 4 hour time frame. We're going to just delete it entirely because it's starting to get this angle that's still sloping downwards, that it could continue and reject here. All right, so let's go ahead and make our assessments from the daily time frame down below. Well, first let's start with the monthly, because the monthly is just around the corner. We got one more day for that. Basically, it's going to close after the weekly candle close, which is interesting. So we're going to go with the monthly time frame. Here we go. Month. So the month closes in 2 days, 1 hour. As it stands currently, let's go to a chart with no fibs on it. Let's just take all these off here. All right. Wait a minute. The charts are different. Ah, that's right. Depends on the chart you're looking at. Let's just go to the Coinbase one. So the Coinbase monthly chart is different than that. Interesting. So it depends on which chart you're looking at, where the volume's going to be at. So it looks like we have to look at the Binance one just because it stands to reason that we are above the cloud here on the monthly and looking to flip that volumetric cloud to support. And we are coming up into some regions here where there were previously vectors, and we reclaimed the entire vector on the monthly, and this could be flipping into support as we try to reclaim the cloud here on the monthly time frame. Within 1 month we did do consolidation, so this entire range is just the consolidation range we were in, and this closes in 2 days time. If we look at our oscillators, we are just starting to get a rising sun event, which has yet to see the takeoff of that golden light level. You are at getting to overbought status on the stochastic RSI, and the money flow is above the RSI here, suggesting you could be getting some money flow disparity, which could flow out at some stage, but getting this last surge up is where it starts to shine. So if you start to get to that overbought status where we're at currently, it's about here. And yeah, if you see that last little bit, it gives you a lot sometimes. So if you look at that last bit on the monthly time frame, you could be getting a burst to the upside from that last little bit of momentum before it starts to turn. You're not seeing these KD lines turn downward in any way, shape, or form just yet. So it's still strong momentum on the monthly. Weekly time frame starting to sputter just a bit. Money flow beneath the RSI suggesting that the money flows back into the weekly time frame to the upside. If we take a look at the oscillators here, we were talking about the other day about the adaptive moving average and whether we are going to close above or below that adaptive, and coming above the adaptive moving average would insinuate flipping that to support to continue. We're getting the double top scenario on the Williams starting to fatigue just a bit on that. If we are looking at the 5-day time frame, 5-day time frame coming down here, the 5-day closes in 5 minutes. So we're getting to behold how the stochastic will reset on this 5-day time frame. So this is a brilliant point in time to be able to see. So you get to see where the KD lines were at, 63 and 72. 72, 63 here, and then you see this one, the Williams at -27 and -31, and you see the money flow at 48 and 56 on the RSI, and then within 5 minutes this will all update instantly, boom, and then you don't really get to see that on a replay tool because it flows in the moment. So it's kind of interesting to note how these flip on these time frames. Getting to see the candle close of them is kind of fun to see sometimes, and when they coincide with other ones like the 3-day right now, we get to see how the 3-day will reset with this 34 and 52 level and the cross down event here at 30. What does that mean in terms of triggering algorithms on the 3-day time frame as well, also coinciding today? Getting an indecision doji on the 3-day time frame. So this basically went sideways for 3 days. And if we look at the daily time frame stochastic, sorry, the money flow and the RSI is equal. Stochastic starting to take off. You're getting this nice little green tidal basin starting to form on the Williams here. Could we start to see a rise up to get that golden light coming into fruition? Is it going to come lower? I have no idea. Could be coming back into a lower level if we grab that liquidity down below. We are currently seeing a rejection at the 706 level of the bearish trend-based fib, as this impulse retrace idea that the 236 entry had you at hello down to the 1 level, and we're starting to try to reclaim this resistance of the bearish trend-based fib levels, and we're just seeing rejection after rejection after rejection on these 0.65, 706, and 786 levels. We've reclaimed the 786 level at 29,316. Are we going to see that rejection at 29,431 and continue down into these pools in the 1382 level at 28,459 or not? Let's go ahead and see what is going on. The daily time frame looks like it wants to bounce at some stage soon, and the 22-hour time frame starting to meander around here to a point and starting to come up. Money flow above the RSI suggesting a fatigue level. If we look at the 12-hour time frame, we're seeing the 12 hours start to take off as well. Money flow above the RSI starting to come up and get fatigued as we try to breach 50 or get rejected at 50 and come back down. You often get that rejection at the 50 level and on the stochastic and the RSI as well. So are we going to get a rejection and start to reset the oscillators some more, as we've seen some suppression on the 12-hour and the lackluster rising sun so far on the 12-hour time frame. If we go to the 6-hour, 6-hour getting extremely overbought, and the money flow extremely above the RSI, suggesting that you hard reset the 6 hour at least down to the 50 level on the money flow. The money flow looking extremely bearish on the 6 hour time frame. So this disparity is what we're looking at here between the money flow and the RSI. When these come apart from one another as they did here, you start to see a reset into the equilibrium where they come back to values of one another. 6 hour cloud also still curving in a manner here, still thick, but it's insinuating at some point there is some sort of 6 hour narrative starting to form. Do you get rejected and come down and start to see this thinning idea where you could surge up at some point? On the 6 hour time frame, we need to see this money flow come back to the RSI first, for me personally. If we look at the 4 hour time frame, we just talked about that earlier, and how that cloud is starting to force itself beneath it's a kind of lackluster flip of the cloud with the price action coming above it, and it's coming below, suggesting that it wants to flip into a narrative to go to the upside. Starting to see that last bit of momentum. We're going to see how this updates in 20 seconds, and then we're going to go back to the 5-day to see how those updated as well. 10 more seconds for the update here on the oscillators. Three, two, one, and boom. And so that took you to a overbought status 92 level on the 4 hour time frame. So does that trigger the algorithms after the daily close? Let's go back to the 5-day and see what happened there. 5-day came a little bit down some more. Let's go to the 3-day really quick. 3-day also came down completely here. You reset the stochastic RSI almost in completion here, and this has yet to open up. The one thing we were worried about the 3-day time frame is you have now crossed down, and the last time we did that, we had back in April 16th, we saw this large retracement back after that point. The difference between then and now is we've basically had a cross down event, and we've been holding, as opposed to the last time we crossed down, we had a huge dump and brought it back up and then came down. And we've reset the oscillator on the stochastic RSI, and the money flow is coming beneath the RSI. And the level is slightly lower than it was back here. So are we starting to insinuate a double top scenario and come back up on the 3-day time frame for at least a double top M pattern rejection to the downside? Daily time frame, let's go see how that updated. So the stochastic came up a little bit, the money flow now above the RSI, suggesting slight fatigue as you have been going sideways, and the money flowing back in but not going anywhere insinuates weakness. As we go back to the 6 hour time frame, overbought. Once again, money flow above the RSI, suggesting you come back to the RSI at some stage on the 6 hour time frame. If we go back to the 4 hour, this interesting flip of the cloud without really some conviction here, seeing that flip of the 4 hour, and you got the 6 hour just above you. So it's kind of interesting to note. If we go to the hourly time frame, let's see. Hourly time frame starting to flip bullish in the cross up event as it's trying to hold this resistance level of the white line 786 of the bearish trend base fib level, trying to flip this into support to try to break back into these levels. When you get rejected off the 6.5 and the 706, that's when you see that short opportunity appear on these bearish trend base fib levels. They're accurate, just like the 236 up here was accurate, this white line, as the entry model for that bearish trend base fib. So these bearish trend based fib levels are kind of accurate representations of support and resistance, mathematically speaking. Okay, so what they're trying to see is if this holds the 786 and continues up above that to the 706 and the 65 level and starts to reclaim those, or is this going to be 1, 2, 3 hits to the high and down you go. So you have basically the power of threes. This is considered 1 in general, I guess, because the inside of this is 1, 2, 3 hits and then you drop, and then here's 2. Are you going to see a third hit up into this level at the 29.5 region? So if you get this 1, 2, 3 and then drop, that could be a presentation of a juicy short opportunity if this is just a stop hunt rise to the top. So let's see what's up there in that 29.5 region. 29.5, 29.6, 29.556. So they would have to come above those 3 hits to the high to basically take out the range at 29.769, but there's not really a short imbalance or large player pools to think about here on the 1 minute time frame. Your largest player up here in the 71 million range at 29.668. Also a partner in crime over here at 100x, 74 million at 29.627. So coming up and clearing these like what is this, olive color, the olive color 100xers, and then continuing lower perhaps. Let's go ahead and take a look at the hourly time frame. You had some previous hidden bullish divergence start to play out here from this level. Let's go ahead and take a look at the lower time frame. 15-minute getting oversold, looking to potentially bounce up here. Okay, so the 15-minute looking to get a bounce. We haven't done this in a while, so we're going to just do this for fun again, throwing on the higher time frame and the lower time frame with the 15-minute. So basically the 15-minute is oversold, but it's attempting to take off, but the 5-minute in orange and yellow here is hitting up against the higher time frame 30-minute, which is slightly overbought and getting, so it's getting this flip. You can see how the time frames interact this way essentially. So the 15-minute in purple and blue is attempting to get some momentum to the upside, while the 5-minute meeting with resistance on the 30-minute. And if we go to the 30-minute, you can see 30-minute is coming down because the hourly is overbought and coming down, and the 15-minute previously is coming down. So you have these kind of downward projections possibly forming because of the overbought status on the hourly. The hourly time frame in blue and purple is overbought. The 4-hour trying to support it here for the last hurrah to the upside. So you could be getting that 15-minute bounce according to the interactions here on the hourly. And so getting that 30-minute with the 15-minute bounce to the upside could take you up to these regions to get that pool we were talking about in the beginning. It is the weekend though, so I don't really have high faith in weekend trading, but we're just looking as we do every day. So if we turn these back off because they get a little bit busy, they're just meant to be turned on at certain moments to see why did this not get takeoff, what's going on, and then you can see the interaction between the time frames. Also the Williams has an alarm here, so this could possibly be coming down as well. Looking at the stochastic RSI and the different oscillator values here, you're getting 2 diamonds, which is only medium time frames here. So the medium time frames are getting fatigued. We already talked about that. The 6-hour, namely the 6-hour and the 12-hour, 6-hour and 4-hour actually. So the 6-hour and the 4-hour are the fatigue time frames that are looking to potentially reset, namely the 6-hour. So the 6-hour time frame having this money flow above the RSI and not the RSI not agreeing to come above the 50 level suggests that this money flows back out. So coming back down into these ranges, we already broke this, so I doubt we'll see a bounce on this level anyway, so I'm removing that little mini impulse bounce that we had, and coming back down into the deep retrace is the wick here at 28,955, and in general just coming back into these pools below on the 6-hour time frame, suggestive of that. The rising sun attempting to take off with a little bit more momentum than the other time frames, but just going sideways and actually making lower highs as you're putting this money flow above the stochastic here. So the concerning thing for me is the 6-hour time frame. If you're in any longs, take a look more closely at the 6-hour and see how this is not thinning at all, and it is getting thick. And it doesn't mean it will necessarily curve. You are getting that curvature, but you get curvature before you drop lower too. And this money flow is suggesting you could drop lower on that 6-hour time frame. If you go to the hourly, getting overbought here, so we reset the hourly, got overbought and made a lower high. So I'm not impressed with how the hourly got overbought here. The money flow did come up above the 50 level with the RSI here to equilibrium. That just means it could go either way here on that, but the stochastic RSI is suggesting downside. So the 15-minute getting that suppression idea on the higher time frame with the Williams reset. You could see that, I mean, technically 1, 2, 3, so I put these together, but this could have already been your thing. But generally I would consider this to be one of the same. So you could group these together and this could get the 4 level. But basically you have your levels for looking for opportunities here. So if we go to our 12-hour time frame here and just like make it very nice for you. So you have basically the initial impulse drop and retrace to the downside insinuated at the 236 at 30,107 that if you cannot close candles above that level, then you're bearish, and then we proved that to be true. Came down to the beneath the 1 fib level and then started to make our retracement out of there and get rejected off the vector candle liquidity, and that was the 0.65 level of 29,512, and that 706 also had you at hello as a resistance level of a continuation into the bearish trend base fib. So now we're starting to reclaim the 786 level as a possible support structure, and we've seen this in the past where we consolidate within this and then eventually make our way down. We're going to show you how that happened here. Basically, we had that within a structure recently. So we had a 786. I can't remember off the top of my head, but yeah, basically that's what the bearish trend base fib levels tell you, these resistance points, and you don't need to use. It will coincide with these wicks and stuff, because these wicks are where it would bounce as it's dropping anyway. So it creates these things, these points of interest that would naturally gravitate from this math anyway. So yeah, to look into the weekly candle close, I don't see the liquidity just stepping up to the plate just yet. We'll keep you posted on the idea here, but coming up to this 43 million that we initially talked about at 29,404 could be the idea here. 404 would put you up in this region. Recovery of this balanced price range, fair value gap, and then continue lower perhaps. If we look at the what's it called? I'm just wrapping it up in a nutshell for you. So coming back down to the 28 7 region, you have $12 billion down here. So looking for a retrace into that wick over here, 28.7 would put you down in this region. So you could recover that and get a double bottom, a proper double bottom before you, if you were actually genuinely going to go higher. All right. So those 5s and 6s did play out before the FOMC. That was interesting. So much wackiness before that, which scared me out. And now we're starting to see these fatigues on 3 time frames and the medium time frames, and we haven't really gone anywhere. So this just looks like it reclaimed that 500 million short idea, which we've lost to father time, but we reclaimed that pool we were talking about. So we've reclaimed all the pools in this wick of this candle dropping down. So we're basically just playing around in some liquidity that still remains up in here, the short liquidity, trying to scare them out of the shorts before coming back down into the pools below. All right, well, yeah, that's my story and I'm sticking to it. It's a boring Sunday afternoon, or Sunday afternoon coming inbound. I'm going out with the family. My wife's birthday was yesterday, so I'm going to celebrate that with the fam. So hopefully you guys can do the same. Let's go ahead and look one last time at something you request. The total 3 is trying to make a bounce here. The LTC coin is having an August 8th or something. So they're pumping into the halving of LTC Litecoin. So this is seeing more of a bounce than total 4. Interesting that this got rejected off of that level. We said it had to come above that 236 level. It did not. And so we're seeing this bearish trend-based fib level getting the bounce off the 706, coming back potentially to get rejected off the 236 in one of these regions. But could just be a continuation down into the 786 level of the market cap for crypto. Total 3 is the thing holding it up right now, which is the Litecoin halving idea. We'll look at Litecoin right now. So you're seeing this bounce off the 706 of the bearish trend-based fib, coming back to the 236 level perhaps. I don't know what this green line is, but it's already been reclaimed. Same with here. So we're going to delete that. So coming back into these 236 levels to see bearish or bullish narratives confirm themselves. And yeah, let's go to the Litecoin. So seeing a massive 4-hour candle on Litecoin. Most likely they're also taking shorts out of the equation. So if we look at the shorts on high block, let's go ahead and see what Litecoin has to say for itself in terms of the liquidity. LTC, there we go. I think we can add more exchanges too. So let's do BitMEX, wait, Binance. Alright, so here's the 1 minute time frame. You had a bunch of shorts, 7 million characters here, larger than the longs, and they ate the liquidity off of that. And now you're seeing some $1 million characters enter into that as the shorts get squeezed, and they could come back in and bounce off the 100xers. Currently have 369 million in long imbalance now. And it looks like they just do this often, because if we go back into history, you have basically bounce, drop, and then you bounce to drop it some more. So it's just a lot of wackiness. The nukes played out here on the hourly time frame. Interesting to note, if you're trading LTC, the nuke idea on the indicator does play out here. We are reaching some overbought status, which has yet to lock in on these higher time frames. But if we go to the lower time frames, we'll see that there is this overbought status that is fatiguing, and we're getting above that level. coming back and retracing into some of these 100xers on Litecoin would make sense at this point. You could just even do a V-shape and just take them all. It doesn't matter, like coming back into this right now. If you guys have anything you want me to look at, a lot of these coins I can see, so if you get the opportunity, we can look at some high block for other coins. 2, 3, 5, 10 all day, all closed, but I'm sure you already know. 2, 3, 5, 10 day all closed today. Interesting. 𝗦𝗲𝗿𝗁𝗁, hey, what's up, man? So we're entering into the Asia session. If you guys have anything you want me to look at, please, this is the last chance. So on the 15-minute time frame, are we going to see a play out of the 15-minute or a drop to the downside? You have the Asian session. If they pump it, they hand it off to London to dump. So if you do see something like this, I wouldn't be surprised. Coming up into that region, hitting the 500s again, probably wouldn't come that much higher. And then leading into the weekly candle close. All right, let's take a look. I guess not. Well, everyone, then that's my story and I'm sticking to it. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision.